Welcome to the Market Recap. In today's episode, the Federal Reserve to oversee banks more tightly, recession worries continue to loom, and disproportionate inflation and wage growth affects economy. Fed to oversee banks more tightly. The Federal Reserve will undertake an expansive review of U.S. bank rules in the wake of Silicon Valley Bank's failure, a top official said Friday following a detailed report on the bank's collapse. Michael Barr, the Fed Vice Chair for Supervision, outlined a slew of potential changes to how the Fed oversees financial institutions, from capital and liquidity requirements to annual stress testing. The changes would not require legislative approval, a senior Fed official told reporters Friday, but would likely take several years to complete. Recession worries loom. Economically sensitive areas of the U.S. stock market are flashing warnings over growth, even as major equity indexes edge higher. Beneath the surface, however, areas of the market tied to economic sentiment such as transports, semiconductors and small-cap stocks dropped in April, while so-called defensive sectors are outperforming. Investors cited growing caution among market participants faced with a thicket of concerns, from fears of a possible U.S. default this summer to worries that the Federal Reserve's aggressive monetary tightening could bring on a recession. Disproportionate inflation and wage growth affects economy. Inflation and wage growth are the main challenges for the Federal Reserve, which is trying to cool off the economy and bring inflation down to its target of 2% per year. The Fed has been raising interest rates for more than a year, and is expected to do so again next week, after a 10th consecutive increase. But the data on Friday showed that inflation and wage growth are slowing down, not speeding up, as the Fed hoped. The Fed faces a delicate task of balancing the need to discourage hiring and ease pressure on pay, without causing a recession or a surge in layoffs. The Fed also has to deal with the uncertainty of the incoming data, which may show a more substantial slowdown or a continued recovery. The data also revealed some contradictions in the economy, such as the resilience of consumers, who saved more income in March, and the pricing power of companies, who raised their menu prices by 10% in the first quarter. The Fed's decision on the next rate hike will depend on the balance of these factors and the outlook for the economy.
Thanks for watching and have a nice day. Hit like, subscribe and ring the bell for more content like this.